Hey, we are back with the show. It's Robert Greenblatt here with Mason Greenblatt. And today we are going to talk about three important things you need to know about VA loans. We talk about, we service a lot of veterans on our team, and there's three really important pieces here that we're going to share with you guys real quick today. Because if you are a veteran, if you know a veteran, uh, and you want to learn something about VA loans, here we go. So, number one thing right at the beginning, Mason, what's an escrow deposit?
So escrow deposits are very interesting. So at the time that your offer as a VA buyer is accepted in this market, in this wild market that we live in, an escrow deposit is that good faith deposit they call it. They call it an earnest money deposit. It is basically the deposit that makes the contracting binding in New Jersey.
Exactly. So, right, the legal term for that, right, is consideration. They taught you that in real estate school. I don't know if you remember that. Consideration. Consideration is what makes the contract binding. So, what if somebody says to you, Mason, okay, I'll just give you $1. And does that make the contract binding?
As a technical, yes, it
Yeah,
does.
it
But is
does.
any seller gonna feel any sort of commitment with a dollar as a deposit?
Mm-mm.
Yeah.
Yeah.
So technically, yes, but I think it's going to be slim to none when it comes to getting an offer accepted with a dollar deposit.
Exactly. So, like a dollar deposit technically does create a valid contract, but obviously the seller won't take that seriously. That escrow deposit is also, as Mason said, right? You said it's good faith, right? So, if it's good faith, it's going to show as a buyer your commitment to the transaction. There's no right or wrong with these kind of numbers. It really depends on the sale price, but at minimum, it's usually a couple of $1,000s. Typically, the perception is the higher the escrow deposit, the more committed the seller thinks you are as a buyer. Make sense, right, Mason? You agree with
Yeah,
that?
yeah, 100%. So, if I'm putting down a $500 deposit or if I'm putting down a $5,000 deposit, it's still money I'm putting down. The only difference is I'm going to feel more comfortable as a seller with a little bit of a higher deposit, feel a little bit more safe and secure.
Yeah, I'm going to think that you're more serious about it if I see an offer. If I'm a seller and you're a buyer and I see an offer that says $5,000 escrow deposit, that tells me that you're committed to this process. So if I see 500, you might be willing to walk away from that. Well, certainly more willing than 5,000 to walk away if something's not going right or you get nervous, right?
Yep.
Yeah, which that's probably another video, the whole what's a contract and how nervous is somebody and what does that all mean. All right, cool. So that's one thing. And we're going over this stuff with you guys today because it's really important. The mortgage companies sometimes do, sometimes don't. But the first conversation that we're going to have with you, if you're interested in a VA loan, is we're going to make sure that you understand these three important points. So the second point on our list has to do with sometimes it's referred to as the appraisal, but sometimes people in the industry will refer to it as a VA inspection. Are those the same thing?
They are.
Yes. VA, yeah.
To a certain degree.
Yeah.
So as a VA buyer, what is great is when an appraiser comes out, they're going to make sure that obviously the house is in good working order. They're going to check a couple of things. They check peeling paint on the windows. They make sure that, there's no holes in the roof. There's certain things as a VA appraiser, they're going to make sure because they want to make sure as a veteran that you are, that you're able to purchase the home and it be a livable home.
Yep.
Deemed safe, of course.
Right, exactly. And here's a nuance, guys, right? So the VA appraisal, which often is referred to as a VA inspection, it's really the same thing. They're not different things. An appraiser in the mortgage industry or real estate industry can get a VA certification. So it's really an appraiser who happens to have a VA certification. And there are certain things like you just said, which are unique to a VA versus a conventional or FHA, but FHA is kind of similar to VA. So I'm going to try to keep us on topic here because I could go all day, you know that. But to your point, right, the VA is going to look at some basic stuff like, are there holes in the walls? Is there peeling paint, particularly around the outside? Is the roof leaking? Hey, I'm turning on the water. Does it get hot? I'm turning on the heat. Does the heat come on? Basic living stuff. Is that the same as a home inspection?
Not at all. And I've had clients decide not to opt in for a home inspection, whether it was a financial reason or just because they thought that a VA inspection was enough. And of course, we try to coach them and teach them that it's two totally different inspections. I try to use the general of an appraiser is going to be there for about 20 minutes. A home inspector is going to be there for about 2 hours. So the home inspector is going to find a lot more going on in the house than an appraiser is going to. And that's just how it works in the industry.
Yeah, exactly. Appraisers are not licensed home inspectors. They are looking at there is some overlap on what they're looking for, but the job in the real estate transaction is totally, totally different. And we'll have a forthcoming video on home inspections and kind of talk about that some more. And now the biggest piece, which is the third piece of this whole thing, has to do with closing costs. You've heard that term before. I'm sure your friends, family have purchased homes. Maybe you've purchased a home before. Closing costs always come up, especially with VA loans. And why? Because VA loans are zero down. If you're a veteran and you qualify for a VA loan, it's the best loan product out there, 0% down. But that does not mean that there is no cost or out-of-pocket expenses for you as a buyer. Really, really important. Mason, what are closing costs?
So closing costs are going to be your title fees, your deed fees, your doc fees. These are your lender fees. These are all fees that are usually, I don't want to say always because I have seen it, not able to be financed into the loan. As a VA buyer, you're going to be able to finance the entire purchase price into the loan, which is great. But these closing costs are not associated. Just as a general rule of thumb in South Jersey, about 4 to 5% of the purchase price is what your closing costs are going to be. So, and that's just, again, it's just going to include your title fees, your deed fees, all your miscellaneous fees. But the great thing is, as a VA buyer, you don't have to put a down payment down plus your closing costs. You only have to technically cover your closing costs, or we could even ask the seller to cover it too.
Exactly, right. So there's the regulations with VA loans say that the seller could pay your closing costs, but in the current market, as we record this, is more of a seller's market than a buyer's market. Essentially, most homes are getting multiple offers very quickly. So that's an important piece here, because if we are in a competitive scenario, a seller will be less likely to pay or cover your closing costs because they don't have to, right? It's money out of their pocket. But to your point, Mason, and you said it, right? So let's say you're a 20% down conventional loan buyer, you're paying 20% down and you have closing costs. Conventional loans, the closing costs are structured slightly differently, but give or take for a VA loan, you can figure about 5%. So if we're shopping for a $300,000 house, your closing costs could be in the range of $15,000. So if you have that money, great. If you don't, you could ask the seller for a credit, maybe a partial credit, right? There are some other creative ways that we can get into that. So there's ways that we can get through that process with closing costs. But it's important to know that you could get a gift. You can potentially take some money out of a retirement account, depending on those situations. So there's other ways there to pay your own closing costs if you can. But those are three really important things that we wanted to jump on here today, guys, and talk to you about with VA loans. The closing costs, what is the appraisal, and is it an inspection? No, it's a VA appraisal. And escrow deposit. So there are some costs that come out of pocket, but if you are a veteran, thank you for your service. You have qualified for the best loan product available, and we appreciate what you do for our country. Anything else, Mason?
Just the one thing that we probably should touch on is if you do decide that you're able to pay your closing costs, you can use your 401k retirement account and not get penalized.
Usually, right? Not always.
Yeah.
It depends. So we always say that's an option. If you have a retirement account, definitely could check that out, because when there is an exception to not get penalized, does that make sense? An exception for not getting penalized.
Yeah.
Then you can, it usually has to do with taking funds to purchase a home for you to live in. That's when there is an exception. Now, we'll always have a footnote for that and say, hey, if that's something you're considering, check with the company or people that administer your retirement account or accounts, and check with them and see how that would work, because we've had lots of clients do that as well. Because, hey, there's nothing more important than buying a house for your family, right?
Yep, for sure.
Okay, cool. Any closing thoughts here?
That's all I got. I'm good.
All right, cool. Well, hey, thanks for joining us today, guys. We'll see you again real soon.